Welcome to Markets Now. I'm Michelle Rook with Jeff Hoogendoorn with Professional Ag Marketing. So we ended mostly higher except for a few of the wheat contracts as well as the hog market. And Jeff, soybeans, let's start there. Traded two-sided. We got a little bit of follow through here after a pretty nice day yesterday. So we're still trading South American weather, or what pushed this market again?
Yeah, it took a little extra push today to get this soybean market to close higher. We did have a little bit warmer, slightly drier forecast come out in midday for the South American weather. So that seemed to add some support to it. But, most of the day we were definitely in red territory. We also had the monthly NOPA crush data come out, and it was relatively close to expectations, 187 million some odd bushels. But I think what's important about that one is it was a record for a monthly crush level. And I think, as we all know, we've got more plants coming online and we'll continue to see new records get set. But it's just really interesting to watch that portion of our industry, if you will. But I think it needed all of that, I think, to close a bit higher, even though the outside markets were pretty supportive all day. But in general, I think it's a win. In my mind, if you keep putting in some higher highs, higher lows for sure, but squeaked out some higher highs today. I think this soybean market can keep augering up into that, that $14 area, maybe is even within striking distance here.
Yeah, I was going to ask you what it was going to take or when you thought we might get over the $14 level. We just kind of continue to have this narrative about a smaller South American crop, or what?
Yeah, I think that is what's going to drive it there, obviously. And we have a lot of time, right? You're very early in that growing season. Already he's coming up with some significant problems and starting to lower that, in my mind, starting to lower the yield for sure, unless we really pull something out of our hat down there. But yeah, I think time's going to matter. You also in the background, you do have the U.S. situation, which I probably think is more important than what the market has, honestly, in the past few months. But very tight balance sheet over there. We did increase the yield just slightly last week, of course, but we all know that's a tight situation. Doesn't take much for a little pop in some export business or something. Going to get them soybeans pretty excited.
Yeah. And meal's been really leading the rally with contract highs continuing, but also we got a big push from soybean oil today, didn't we?
Yeah, we sure did. And, if you look at that meal market, it's just another thing that I think is super interesting about this climate. We've been hearing for a couple of years now how we're going to start turning on all these new soybean crush plants and meal's going to be darn near free, right? And now look at the one product that's leading us upwards and onwards, which is very, very unexpected. But I think it also goes to show, the folks that are trading beans and trading the crush and trading the export market, they're talented folks and they are working hard to get rid of meal because everybody knows we're going to have more of it in the future than what we've had in the past. And they're doing an excellent job. So they're focusing on exporting meal, going to focus a little bit less on exporting soybeans. And, problems well precede really happen, right? So I think that's a good example of what we got going on in this soybean complex, kind of from a bigger picture standpoint.
So corn could only eke out about a penny higher close here with the idea that we had a big reversal yesterday. Were you disappointed in that?
I'm not horribly disappointed in it. I've been thinking that the corn market has some extra weight on its back here, going back again to last week's monthly supply and demand report and the overall balance sheet there. I mean, there's some real issues in that balance sheet, especially, extremely unusual to switch the trend of the yield here. I'm not crazy surprised based on what we kind of thought we heard from the combine observations, even though those are pretty dangerous observations to be making note of. But to bump that yield almost 2 bushel this late in the game, I think is really impressive. And that corn market really never traded it, in my opinion. What immediately took over almost was this South America and the soybean situation. So I think almost any up day on the corn's a pretty decent day, to be quite honest with you. I think it's got a lot of its own issues here. Not saying it's got to go to zero or anything like that. anytime soon, because I do think the beans are going to help it out a bunch, but it kind of just keeps it in a steady mode.
Yeah. But while corn tries to follow soybeans, sometimes it gets held back by the wheat market. That seemed to be kind of the case today, especially when you got, crude oil was higher, the dollar was sharply lower. There were other reasons for the corn market to bounce.
Yeah, for sure. And then why didn't the wheat bounce, right? That's pretty disappointing from a wheat perspective if
Yeah.
it couldn't get any traction on a day like today.
Yeah, no doubt with a sharply lower dollar, you would have thought so. Cattle market, let's talk about that one. Of course, we did see a sharply higher day. How much of that was tied to the CPI data coming in better than expected, and then the rally that we got as a result of that in the stock market?
Oh, I think it's almost 100% related to the CPI information, Michelle. Really was a bit of an eye opener for me once again here. You try to figure out this cattle market and the demise that we've been going through here in the past, well, almost a month now. And it's like, okay, how much of this is fundamental? How much of this is just outside kind of, economic type of concerns? And this, for a while being what, 340, weren't we higher on the February for a bit today? Really pretty impressive rally, but I think almost entirely because of CPI report from twofold. One, you mentioned the sharply lowered dollar, which that was an impressive drop in the dollar. It's almost like, a small change in this consumer price report really changed the trajectory of that dollar. So it'll be interesting what the follow through over there is. And the other outside markets, stock market being up over 500 for a good chunk of the day, and they're on the livestock close at 1 o'clock. All of that, I think, pushed the cattle higher. Really nothing fundamental backing it up, I guess, is my argument. But then you flip over and think about the close of the day, and I get a little disappointed. We closed well off the highs, even though a lot of those outside markets were on their highs or the lows, and however you want to look at the dollar index, for an example. But a bit of a disappointing close, even though $1.60 higher, so isn't terrible for sure.
Do you think that the recovery in cattle is going to be stymied here going into this cattle on feed report with expectations that's going to be kind of bearish?
I'm afraid, yeah, I'm not very optimistic the cattle market here this week. I think you're better off taking your lumps and bumps, and if you can get out of this week kind of at steady money, I think you count that a win. The catalyst, I don't think it was the reason, but the catalyst to start driving this cattle futures market lower was the last cattle on feed report, and that the big message out of that was more cattle on feed than 1 year ago, right? And I got to admit, that's a little hard to argue with. It's a little bit bigger picture story than that, but this one is going to say very similar, results, I would say. And you look at all these video sales happen all summer. Look at the barn traffic here on the feeder cattle. Really crossed the western part of the cattle country here. That was just some heavy traffic for October. So we're expecting some big placements. The average guesstimates is 7% more placed in the month of October than last year. I think you're going to see all of that. That puts you about 2% more cattle on feed than a year ago. I'm afraid you're going to see all of that too. So it's going to keep the buyers out of the market here this week. I think sideways is going to be a win.
And hogs went the opposite direction. So did we run up into some chart resistance and see some profit taking, or was that these cattle hog spreads being put back on?
Definitely see some cattle hog spread activity there. I think that would help explain why the hogs were a little bit lower. Definitely got some chart issues. But in general, I'm fairly happy with the way this hog market is performing. We were up yesterday pretty decent on it. We've had some back and forth on the product values. So last night's product values was a couple bucks lower. I don't think that's a huge surprise to anybody, but lower none the same. So I'm not too disappointed in a dollar or so or lower close here up front. Tomorrow's going to be important. If we can kind of maintain some sideways back and forth, I think that's about all you can expect out of the hog market, here going into late November already, Michelle. So it's not a real pleasant time to be a hog producer.
But that's only because we have, seasonally, we're into some of these bigger numbers. So is that why you feel like this market has probably handled that pretty well?
Oh, for sure. I think we've had some huge numbers come through here. Last week was down a little bit, under 2.6 million, but that's really just because of Veterans Day. I think, the 2 weeks before that were well over 2.6 million a week. This week will be over 2.6 million. Next week might be, all of that too. So you're gonna start seeing you're gonna continue to see, excuse me, some pretty large kills coming down the pipeline here, outside of Thanksgiving holiday, of course. And yeah, so to maintain a $86 to $87 cutout in that type of environment, I think is a big win.
Well, hopefully we can keep holding it together. Thanks so much for joining us, Jeff Hoogendoorn with Professional Ag Marketing, and that is Markets Now.